Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Well, private equity is starting to play a pivotal role in harnessing Africa's economic growth potential, with investor confidence on the continent on the up. 2011 witnessed the largest ever private equity funds being invested in the region, and in the year to come, the average growth rate is expected to return to the pre-crisis levels of 5.5%.
Companies operating in Africa that are hemorrhaging money have no competitive advantage and virtually have no chance of survival, let alone succeeding, may not necessarily need to throw in the towel. Private equity companies can provide the cash injections needed to revive ailing businesses, promote innovation and spur job creation, in return for a part ownership of the company. This would mean that they get a share of the profits and may impact future business decisions for the acquired company. According to the Emerging Markets Equity Association, private equity investment in sub-Saharan Africa was a sterling $1.3 billion by the end of 2011, and growing. In the last year, more than 50 private equity firms set up shop in East Africa alone, and together they raked in over $700 million in funding that aided in shaving costs across the different sectors. Private equity has become among the more preferred financial models, whereas banks have been the traditional financiers and founded mostly on loan interests and service fees. Private equity is propelled to ensure business growth, as investors only make money when the business gains value. Patisa, the African fund manager, recently rolled out its flagship African Agriculture Fund, which is solely focused on investing in agriculture and food sectors by providing equity funding to these sectors. Although this financing model does prevent many positives, there is no denying that downsizing can happen when a company receives private equity funding. Investors may also want to be more involved in the long-term vision of the company, which may need to be realigned with that of the acquired company. Private equity companies are also posed with challenges. According to a survey conducted by Emerging Market and Kroll Advisory Solutions, investors entering emerging markets such as Africa find that the commercial, operational and reputational due diligence are not on par with that of more developed markets. This is due to the overlap between public and private sectors, as well as the unreliable regulatory and political environment. In order for African businesses to continue to thrive, a more balanced approach to regulation and a nurturing business environment is necessary to encourage investment and innovation. Tumisho Mahanyele, Johannesburg.
Well, joining us in studio to take a closer look at private equity on the African continent is Colin Rezek, who's Director at Vantage Mezzanine. And joining us from our bureau in Lagos is Dapo Okobadejo, who's a partner and head of the financial advisory services firm KPMG Nigeria. Thanks so much to you both for joining us today. And Colin, perhaps let's start off right here in Johannesburg. What's your reading of the status of private equity in Africa and the kind of activity we're seeing in this area? Perhaps let's position it against the role private equity has to play on the continent.
I think just to look at the bigger picture, one must look at Africa. I think there's a few things people don't realize, that Africa in quantum, in the size, is as big as the US, China, India and Western Europe put together. So I think when you look at that, when you overlay that with the population growth, I mean, they estimate by 2015 that there will be 3 billion people in Africa. That's, as you know, much bigger than China and India will be at that time. And even earlier than that, around the 20, they're saying the youth, which is the spending population, will be bigger than India and China. So I think as that as a background, there has to be massive opportunities for growth. And private equity is a huge stimulant of growth, as has been proven in countries all over the world.
Yeah, and certainly that's the status of private equity. But Dapo, just how recognized is this model of financing as a finance vehicle on the continent from what you've seen? And what have some of the perceptions been of it? You know, is there a willingness for businessmen, businesswomen out there to actually work within the structures that are set up by private equity investors?
Yeah, thank you very much for inviting me. Essentially, when you take a look at private equity as an asset class, it's gaining a lot of momentum and popularity in Africa at the moment. And the reason why it's so important, right, for the growth of most economies in Africa is actually because of the fact that the international outlook or the ownership of most private equity funds, the GP funds, is such that will help develop, first of all, the key management talent issues that we have in Africa, number one. Number two, it is clear that the growth, there's so much growth in Africa, but it is clear that most African governments or even the public sector cannot fund all of those growths. So when you look at the issues, with economic stagnation in most parts of the Western world and the very significant growth in GDP in most emerging markets, Africa inclusive, there's absolutely no doubt that it's going to be a marriage where the opportunities are enormous in Africa, and then the funds that will be used to fund all of these investments, to make it grow, will be coming from abroad essentially. But that's on the one hand. The second thing also is the fact that the critical challenge with most African businesses is that they're not well institutionalized. Having a private equity fund to invest in most of the companies would actually help develop the management talent, right, and also attract very good international skill set into those companies, which of course will in turn then spread across Africa. In addition to that as well, you see a lot of the companies that we have in Africa right now, they are really not very, very big or large-scale companies. There are just very few of them there. You need a situation whereby private equity funds can then fund across the value chain. Yeah. So I think private equity investing is actually very, very essential. It's contributing significantly to the growth of Africa. But you're right that the level of awareness, right, of private equity investing is something that is new, and that's why we need a lot of education about private equity investing in Africa.
So we're looking at growth fueled in part by changing perceptions of this industry and this vehicle of finance on the continent. Colin, looking at the broader operating environment, though, we're still faced with a slowdown in global economic growth. That's still very much on the cards. So how has this impacted the industry and the ability of a player like yourself to raise funds effectively?
Look, I think there are two issues. Fundraising, without a doubt, has been extremely difficult worldwide. And I think for us, we found it very difficult to raise funds for Africa because people always want to see a track record in Africa. And us being a South African player, we found it difficult. But having said that, we've just raised 1.9 billion. And that's for mezzanine funding. As you said, it's Vantage Mezzanine. And Vantage Mezzanine plays in, we're the largest independent mezzanine player, and it's very similar to private equity. But why it's very attractive for Africa is it's less dilutive. So we take less shareholding, we put more loans in, but less shareholding. And we like to think less invasive to the company because ownership is very important. Mid-markets are normally family-owned businesses in Africa. And I come from a family-owned business, so I understand the situation where family-owned businesses are very protective of their equity and they don't like to give it away very easily. But if you seem to be putting money in to grow their business, to help them corporatize their business, to help them expand across the continent, I think they see it as a lot less invasive and a lot more attractive to them.
Yeah, taking a look at fundraisers, and initiatives and the kind of response you've received from the investment community at large, what is their perception of frontier markets specifically? Because South Africa, let's be honest, has been on the radar screen for a long while now. It's these new markets like Nigeria, like Ghana, like Kenya that are only now starting to gain prominence.
It's very interesting because it's a bit of a double-edged sword. When we talk about South Africa, they say, but you developed and your growth rates are mediocre, maybe 2.5% to 3%. They say, no, we want to be in the rest of Africa. So they see the higher growth rates, the higher opportunities. But then they come with the argument that there's instability, there's currency problems, all these things that they perceive as higher risks. So what they're saying is, well, we should be compensated for those risks. So they want to see higher returns. But having said that, there's definitely, I think, a wave towards Africa from an investor base worldwide. I was in a conference in London a few weeks ago, and Templeton, one of the biggest asset managers in the world, said they really love Africa. They love and even the debt products in Africa, because even the debt products are yielding
We've had
good
some
returns.
legislation supportive of that. I mean, I know in South Africa that we've got legislation concerning investments made by pension funds, where funds are explicitly allowed to invest in private equity, broadening that entire investment landscape, but because it also opens up opportunity for funds to invest more in the rest of Africa. And that started, 2 to 3 years ago?
That assisted us, and that legislation said from 2.5% of a pension fund's size, they can allocate to alternate assets, which is private equity, mezzanine funds, hedge funds. They've now increased that to 10%. So I think what happened is the medium or to smaller size funds suddenly had a meaningful amount to invest in these alternate assets. So that's when they said, well, let's look at these assets and let's invest in these assets. So that has been a driver to help our industry attract more funds from the pension funds.
Dapo, many have been waiting for the shift to happen, in Africa, where Africa can actually partake in this, particularly the Nigerian pension funds, when they're allowed to invest their money to unlisted investments. When do you see this next step being taken on your end?
Essentially, I think that the pension fund regulator in Nigeria is actually, also embraced the issue about alternative investments, just with the view of diversifying the portfolio of most of the pension fund administrators. Recently, they've actually just approved up to 5% of pension fund investments, to be allocated to private equity. But I think the real challenge there is essentially when you look at the criteria and the conditions that are set, that are put in place to ensure the PE funds actually access this funding is where the real challenge is. When you look at a place like Nigeria, for instance, where, yes, private equity has been with us for some time now, but you see that when you look at the local private equity funds market, it's actually very, very few and far in between. It's just one or two private equity funds that actually are well qualified to be able to access this funding. So I think what it is that for most international private equity funds, they've got to be able to come up with a structure, right, where they are situated in Nigeria and satisfy the conditions of the pension commission, that's the regulator of pension funds in Nigeria, to be able to access the 5% allocation, which roughly right now is running to almost about $500 million.
As a pension fund, as a private equity player, rather, Colin, that's cast his glance at Nigeria in a very big way. I mean, what are some of the investment opportunity you're seeing there specifically, and how are you weighing it up against the potential risk?
It's a good question, because I think Nigeria is very much oil and gas focused. So a lot of the deals we see is around oil and gas, or suppliers to the industry, or industries that surround themselves around oil and gas that service the oil and gas industry. So I think at the moment that is a very big, I would say, part of the Nigerian economy, or part of the opportunities. However, a lot of it is situated in the Niger Delta, which is seen as extremely risky. When our associates go up there, they sometimes have 6, 8, 10 bodyguards going with them into the Delta, because they call them HVRs, and it's commonly known. There's a high value target in the area and everybody knows about it. And, kidnapping is a risk there. So I think it is risky, but if you just take the broader, Nigeria, when you have 150, 160 million people there, the consumption, we saw it in this country over a period where consumption just, exploded over a period. Once your lower class starts moving into that middle class and start consuming your goods like cars, food, beds, refrigerators, etc., etc. So I think in time to come, those other industries will start booming. But right now, I think it's very dependent on oil and gas.
That scenario you outlined sounded very mafia-like. Dapo, if we look at the situation in Nigeria, I mean, obviously, it's when it comes to investing anywhere, it's about identifying the risk, whether it be country risk, industry risk, currency risk. To what extent is perceived risk in Africa generally greater than the actual risk?
Yes, I mean, that's a very, very good question, because, again, before I go into that, I think I should quickly address the issue of the opportunities for investment in Nigeria, because I think also there's a perception out there that because Nigeria is an oil and gas country, that all of the investments or possible or potential investments will necessarily come from oil and gas, even though it's significant. The highest contributor to GDP in Nigeria is actually agriculture at about 40% thereabout. But there are 4 different areas of opportunities that I see based on my decades of experience in advising on investment decisions into Nigeria and across the West African market. The first, he has said, is oil and gas, and that is true. Apart from the fact that we're seeing some of the multinationals, the IOCs, realigning their portfolio, we're seeing some transactions coming from that space. But also, there are rumors also that there will be another bid round in Nigeria from marginal oil field perspective before the end of the year or probably first quarter of next year. Thirdly, Nigerian government has also promulgated what we call the Local Content Act, which means that they want to retain, there's an aspiration to retain a lot of the value addition and the skill set within Nigeria and by Nigerian companies. And that is also throwing up quite a lot of opportunities, especially in the oil service sectors. But aside from that, the second sector that I think is booming right now is financial services. When you look at financial services has gone through quite a lot of reforms, all right? And a lot of our banks are actually very clean, or at least cleaner right now. There are opportunities in that space because practically, a few of the banks are just offering retail banking services. When you look at Nigeria with about 160, 170 million population, and you feel that even if 50% of that population is the addressable market for banking services, we only have just about, less than 30 million banking customers in Nigeria today. So the question is, how will the remaining 50 million customers be served? The current banking model today will not necessarily be profitable for the banks to serve those people. Yeah. So to enhance further banking penetration and financial inclusion, we've been very lucky to have the mobile banking technology, which has been proven to be very successful in East Africa. And a lot of the banks are leveraging and partnering with telecoms companies to actually access the unbanked population. And when you realize that, the informal sector in Nigeria is actually very, very high, then, and the fact that the economy is largely cash-driven, so there's so much money outside of the banking population which can be brought into the banking population.
Absolutely.
Recently as well, the central bank has promulgated, I've just launched a policy of cashless, they started with Lagos, and we're seeing a significant increase in the use of cards, which is essentially transferring the informal transactions into the formal transactions. So there's huge opportunity in the banking sector. But I think by far the greatest opportunity is in the fast-moving consumer goods. I mean, where you have a population of about 170 million people, even if there's nothing, they're going to be consuming stuff. When you look at it from food and beverage, or you look at it from home and personal care, or, logistics and distribution, enormous amount of opportunities in that space. And we're seeing a lot of interest, to basically capitalize on these investment opportunities. Then the last one, of course, is infrastructure. Now, yes, we haven't got infrastructure in Nigeria. It's not adequate. Everybody knows that. But, is either you look at it as a problem or you look at it as an opportunity.
Absolutely. And it's
right?
with the diversification, Dapo, of these economies in Nigeria and, outside of its borders as well, that even further opportunities put on the table for private equity players. And that, of course, as they look at ways to mitigate some of the risk that comes along with investing in Africa. And one of the keys to that is making sure they hold a diverse portfolio. We're going to have to hit pause on the conversation for now. We're heading into a quick commercial break, but there's more on Invest Africa when we return, so don't go away. Welcome back to Invest Africa, and still with me in studio is Colin Rezek. He's Director at Vantage Mezzanine, and from our bureau in Lagos is Dapo Okubadejo, who's partner and head of the financial advisory firm KPMG in Nigeria. Thanks so much for staying with us. Colin, let's pick up on that which Dapo was running us through ahead of the break. I mean, he outlined the various sectors that are starting to open up opportunity over in Nigeria. If we get a little bit more specific, what's the one thing that often gets your attention about a company that you want to actually get into?
I think there are a few things you look at. I think one of it is sustainability. And sustainability really means defensibility. Is, how established is that company? We always find that the top three players always, I think, survive in the tougher times. So we as a private equity or mezzanine house like to believe, let's support the players that are number one or two in the industry. Then we like to look at the, as I said, sustainable or defensible industries. I think like healthcare is very popular. Food sector, we spoke about fast-moving consumable goods. We've invested in a company that operates across East Africa and wants to operate across sub-Saharan Africa in that sector. And I think definitely, infrastructure, where it is large tickets and there is a role to be played by the development funds and about governments themselves. But I think around the industries around that definitely have, I think, an important role to play in bringing that infrastructure together, because without the logistics, you can't move these goods across the country, and that becomes your challenge.
Well, what process does the entrepreneur have to go through with you before actually qualifying for finance?
Often I think there are a few things. Of course, the entrepreneur himself, it's always people. You're backing somebody. I've seen successful people do very well in let's say, a moderate industry, and vice versa. In a very good industry, I've seen, let's say, not the best operators not do very well, even though it's a very good industry. So I think people are very important. I think as I said, the industry itself, and then the systems, the controls, the way they run the business, the collaboration also is to bringing other people in their team.
And the openness to collaborate potentially with a partner like yourselves. I mean, how much hand-holding do you do?
And that's a delicate one. That's where you need a people skill, because you want to guide them, but you don't want to run the business for them. And because you don't want them to be reliant on you, and vice versa. So I think it is a bit like a marriage where both parties have to work at it. And it's very important that they understand what your objectives are and you understand, what their objectives are. Yeah. Because in private equity, there generally is an exit frame, so you need to tell them up front about that and how it works, and they have to buy into that strategy.
Double, broadly speaking, I mean, when it comes to some of the fundamental issues for developing, and maintaining, sustaining growth levels, judicial and regulatory framework has got to be amongst the key focus areas as well. What's your evaluation of African governments' backing of open market philosophies and the work they're doing from a regulatory perspective to actually encourage investment?
Yeah, I mean, I think that when you look at Africa compared to most other emerging markets, I think a lot of the national governments have actually been very forthcoming in giving a lot of, incentives, tax waivers, 100% foreign ownership, easy repatriation of profits and dividends. I think most African countries have been able to do that. I think the real issue from the regulatory standpoint is the judicial system. In case there's a commercial arbitration or there's a commercial suit, how quickly would that be settled? I think, there's a lot of learning and growing in that area. But aside from infrastructure, where you have to deal with government, where I can say that there is some element of political risk there, most other sectors are, really purely consumer-facing sectors, like, banking services is already been reformed in most African countries, fast-moving consumer goods. Once you've got very good business model and, you have a fast-growing sector, you have a huge consumer population, increasing urbanization, then, there's less risk in that space. So that's the way I'm going to put that.
Colin, while stride gets made in that regard, exit options are limited, though, and that a very important consideration for us to take, to make when investing in African companies. Only 4 exchanges in Africa have a market cap greater than $50 billion. Others don't have the liquidity to absorb IPOs in excess of $100 million. And one would assume that, that's not doing feasibility any favor here.
I beg to disagree in a sense that I think good businesses in Africa will always have buyers, and be it international buyers, be it other private equity players. So I think exits, I don't think are a big issue. And, with the other type of funding like mezzanine funding like we have, we help people, take cash out the business, or we help people exit in a way. For us, exit is self-liquidating in our structures because it's paid off over time, and there's an exit date where we get refinanced. So from our perspective, it's not a problem. I think from private